It's your boy Ken White, host of the Southside Unicorn Show. And today's guest is Jay Conner. Now, you might be asking yourself, is that any relation to Sarah Connor? No, it's not. He's not here to terminate you, he's not here to get you, but he is here to help inform you on something very, very important. When we don't feel well, we go to a doctor. If our car isn't working right, we go to a mechanic. But where do you go when money's not working right? Because you see, some people don't understand the actual utilitarian use of money. Money is a system, money is a machine. And if your money's not working right, perhaps at the bank or at your local credit union, you need to find a way to make your money work right. Well, today we have Jay Conner. He is the private money authority. He's that mechanic that can help you fix your money situation. So that's why I asked in this show, what condition is your money in? So without any further ado, I want to introduce you to Mr. Jay Conner, the private money authority. Hi, Mr. Conner. How are you?
My lands, I'm doing fantastic. Thank you so much for inviting me to come along and be on your show and talk about my favorite topic, my favorite subject that I'm so passionate about, and that's private money. Why am I so excited about private money? I'll tell you why. Because private money for my real estate deals has had more of an impact on our real estate investing business than any other strategy that we've employed ever since we started back in 2003.
Wow. Now that you said a mouthful when you said that. And I'm considering when it comes to private money as it relates to the real estate industry, a gentleman comes to mind. His name is Jerome Powell. Are you familiar with Jerome Powell, sir?
I'm familiar with the name Jerome Powell. Yep, he is the chairman of the board of governors that oversees the Federal Reserve.
That mythical place that and it's not even a government entity, if I'm not mistaken. They don't actually, they're not the government, are they?
Well, that depends on your definition of the government. The government tells the well, doesn't really tell the Federal Reserve what to do. They are their own entity, but the president can hire and fire whoever the president wants to run that particular department. So it depends on how you want to define part of the government.
Okay. So since that part of the government seems to be acting pretty sketch, if you ask me, because with everything that's going on in our nation, the tariffs seem to be doing what they're supposed to do. Immigration is having an impact, and I don't think it's necessarily a negative impact, but that's yours truly, my own opinion. But I'm about to say, since the Fed and this Mr. Jerome Powell seem to be behaving sketch, and they are connected directly to what we consider the banking system, where real estate draws its mother's milk from it, which is money. I think it's time we start looking in other directions to get money for financing. That's someplace that I think you can help us with, is it, Jay?
Oh, my word, yes. Because in this world of private money and getting funding for real estate deals, it's got nothing to do with what mortgage lenders are doing. It's got nothing to do with what the Federal Reserve is doing. And here's why. The traditional way to borrow money is you go to the local bank, you go to the mortgage company, and you get on your hands and knees and you say, please fund my deal. And the traditional way to borrow money is, and this is stinking thinking. This is the old way of thinking. The traditional thinking is whoever's got the money to lend makes the rules, does the underwriting, sets the terms, sets the interest rate. But guess what? In my world of borrowing money, I make the rules. I set the terms. I'm my own underwriter. And here's the difference. Instead of applying for a mortgage or asking for a mortgage, I'm offering a mortgage. You know, I've got 47 private lenders right now funding my real estate deals. And what's interesting is not one of my lenders ever heard of private money until I put on my teacher hat, which says private money
Private money
teacher.
teacher.
Private money
Be like,
teacher.
so class is in session, I take it. I should have known we were in class today. So now, when it comes to the private money lender, and it sounds like You got connections. As we used to say on the south side of Chicago, you got the hookup. And when a man has the hookup, you should listen to what he's saying. But I do want to ask you, okay, it sounds like private money is like a big secret, right? Is there a private club or just how much private money is there out there? Is this like a one little thing or how much private money is there?
Right. So private money is not a club. You see, so I said something really important, Ken, and that was none of my private lenders ever heard of private money until I told them about it, until I exposed them to them. So who is a private lender? So first of all, let me tell you who a private lender is not. A private lender is not and is not equal to a hard money lender. A hard money lender is still institutional money. A hard
You
money
writing this
lender
stuff
in
down,
the
you do realize that, right? We're all writing this down. Hard money lender.
yes is not private money. And the reason I say that is that you've got, and by the way, I'm not poo-pooing hard money lenders. Some of my best friends in the world are hard money lenders, but you know why do I want to borrow that money when I can go directly to the source? So a hard money lender is an institutional lender that has gone out and has raised money from individual investors to invest in the hard money lending fund. And then the hard money lender turns around and loans that money out to real estate investors, charges origination fees, and et cetera. That's not private money. Private money, Ken, is when you're doing business with an individual. And these are ordinary people. I mean, of my 47 private lenders, I've got retired school teachers, I've got law enforcement officers, I've got people in the military, and they use either their investment capital, just liquid funds that they don't want to get stupid low rates in the local bank and a CD, and they're sick and tired of the volatility of the stock market. They're looking for a reliable rate of return. These are ordinary people that are using their investment capital and or their retirement funds to get a nice rate of return. So there's this thing called a self-directed IRA. A self-directed IRA is a company, also known as a third-party custodian, that is approved by the IRS. And so an individual, just like us, can take current retirement funds, might be in the stock market, might be in a previous 401k at an employer, and they can move that money over with no tax consequences, no penalties to the self-directed IRA company, the third-party custodian. Now they can truly self-direct. So now they can be a private lender in addition to just investment capital. They can be a private lender with those retirement funds and loan to us real estate investors on real estate deals. So we're doing business one-on-one transaction with ordinary people with no middle person involved. How much private money is available? Prior to
Mhm.
COVID, there was $18 trillion in cash in just
Stop.
ordinary
Stop.
people's
Did
money
you say 18 with a T?
with a
18
T prior to
trillion?
COVID. Prior to COVID.
Whoa.
Today, 31 trillion. Today.
Out there
I
waiting to
think
be
the
put
White
in people's
House has been
hands.
printing some money.
Wow. Now I gotta ask you a question. I hear what you're saying, and now for retirees, those of us who well, I'm not a retiree yet, I'm still out here on the grind. But for those people who are actually like some of my friends, they're retired or semi-retired, and they're watching their 401k, 401ks do somersaults. It's going up, it's going down, it's doing this, it's gone, it's back. Um, this sounds great for them. I heard what you said about safety nets for them. But now, because this is something different than the FDIC, where $100,000 of your money is insured should something go cattywampus, what is the protectorate for someone who would actually take these private loans? Is there any risk for them?
Ken, I'm so glad you asked the question. Of course, there's risk in anything you do. There's no guarantees in life. So let's talk about mitigating the risk. How do other real estate investors who are using private money, how do we protect, how do we protect our private lenders? Well, there's a number of ways. Number one, we do not borrow unsecured funds. Now, we could legally, we could just borrow money, give them a promissory note, and all they got is a paper receipt, but we don't do that. Not only do we give them a promissory note, but in addition to that, we secure the note, we collateralize the note by the real estate that we're buying. So everything we do is what's called asset backed debt. Asset backed debt. So that means we're going to protect the private lender just like the bank is protected. So our private lenders are not equity sharing in the profits. They're getting a set rate of return. How much? I've been paying them 8% ever since 2009, and they love it, particularly when
I
you
would
compare
too.
that.
Wow.
When you compare that to what you can get in the local bank now, which is less than 3% in a 7-month CD. So it's backed by the real estate. So what does that mean? What does that security mean? That means if the borrower, the real estate investor, does not pay the private lender, guess what? The property does. If they don't get your money from the borrower, if they don't get that interest, if they don't get paid back, well, their legal recourse is they can foreclose on the property, just like a bank would. Now, they don't want the property. I mean, they want to be a passive investor. That's why they're a private lender, but that's their
Mhm.
security. Now, secondly, how are they protected? It's a very conservative loan to value. So how are we protecting them? We don't borrow more than 75% of the after repaired value of a single family house. Now, I didn't say
Oh, that sounds
75%
like
of
a
purchase. I'm sorry?
that sounds like a NASA spaceship to me. I mean, on the spaceship, they have what's called redundancy. You got two systems that kind of make sure if one goes bad, there's another one to hold it up. Well, at 75%, you're already dealing with positive money the minute you even secure this deal. Am I right?
Correct. Correct. So it's
Wow.
secured. It's not unsecured. It's a conservative loan to value. How else do we protect them? Well, we name the private lender, these ordinary people, as the mortgagee on the insurance property, on the property and casualty insurance policy. So that means if there's a claim against that insurance, but that insurance policy, that coverage, well, the insurance company is going to make the check payable to the private lender and to the borrower. Well, that private lender's got to sign
Wow.
off on that check before you, the borrower, gets the check. That's the same thing the bank does. We also
They
name the
definitely gonna
private.
get their money back.
Exactly. And we name them on the title insurance policy as an additional insured in case there's any title issues. So think of the private lender as the bank, giving them the same. They know exactly. It's just like them putting money in a CD, certificate of deposit, in the local bank, and they know exactly what the rate of return is going to be. If they invest or loan $100,000 for that year, and you're using the money for the whole year, they know they're going to get $8,000. Now, if they're using retirement funds, their interest is either tax deferred or tax free, depending on the kind of retirement account they got. If it's investment capital, just liquid capital, then they're taxed at ordinary income tax rates.
No
So,
way. Come on.
yep. So depending
This
on
is
where
this
the
is
money's
really
coming
good.
from, as well as taxes.
Wow. So, I mean, there must be people knocking down your door, not so much for the ones who want to buy the homes, but for those who want to become part of your clique, your family of the private lenders. This is a really good system.
Absolutely. See, here's the deal. There's more money available than there are deals. There's more money.
Wow.
I just had a current private lender send me a text yesterday, and he texted me. He says, "Hey Jay, I just came into 295,000 more dollars. How soon can you put it to work?" Right? I got another call 2 weeks ago from a current private lender. He's got an additional 300,000 wants to invest. That same week, 2 weeks ago, another private lender called me up and says, "Hey, I've got 200,000 more. When you can?"
Wow.
So instead of, see, in this world of private money, as a real estate investor, instead of you begging and chasing and selling and persuading and chasing the money, you're
Mhm.
attracting the money. The money's chasing us, and it's a win-win for everybody. It's a win-win
Well,
for
watch this.
everybody.
Speaking of win-win for everybody, I would like to get a little win up in here. For me to do that, I got to get some sponsorship going on. So, Jay, it's time for us to take a break. Ladies and gentlemen, this is really good information. I love it when we have guests like this. You want to keep your pen and paper out because Jay has more to tell us when we come back from these messages. Go nowhere.
When I see a new broadcast from the Southside Unicorn, I can't wait to listen to it. You just never know what he's going to say.
Hey, Ken White here, host of the Southside Unicorn Show. If you're enjoying what you're hearing, reading, or seeing, won't you support the show? You can do that in two different ways. You can buy merch or do a straight donation. To buy merch, go to www.thesouthsideunicornshow.com. To make a donation of any denomination, use the Cash App. Our account number is the $ SSUS 44. And thank you very much. Hey, listen to me. There's no place I'd rather be. There's nothing more I'd rather do than being right here doing this show for you.
I'm so glad that you're listening and tuning in. I'm Jay Conner, known as the Private Money Authority. And I'm so excited you're here because I want to give you a free gift, and that is my book, Where to Get the Money Now, How and Where to Get Money for Your Real Estate Deals Without Relying on Traditional Loans. And you can pick up the book for free at jayconner.com/book. That's JAYCONNER.com/book. And you are listening to one of the most amazing podcasts and hosts on the planet. His name is Mr. Ken White. He's the host of the Southside Unicorn Show. I've been a guest on over 800 podcasts, and Ken White wins the prize. You're glad you're here.
Step 1, train the people only to consume. Step 2, infiltrate adults with the news. Step 3, indoctrinate the children through the schools and the music and the apps on the phones that they use. Step 4, separate the right from the left. Step 5, separate the white from the black. Step 6, separate the rich from the poor. Use religion and equality to separate them more. Step 7, fabricate a problem, made a lie. Step 8, put it on the news every night. Step 9, when people start to fight and divide, take control. This is called situational design.
Hey, my name is Toot Sweet, and I'm New York City's original artist, singing for the cause of freedom. I've spent the last 10 years of my life documenting history through my music. It's like a recipe that's blessing me, bringing out the best of me, aggressively testing me to create my own destiny and understanding, universally accepting adversity and learn more lessons in life than you'll learn in any. And when I'm in need of a dose of reality to escape the liberal land of make-believe, I tune in to the Southside Unicorn, where the truth is as solid as New York City concrete. My name is Toot Sweet, and you're listening to my friend Ken White on the Southside Unicorn, and this party is just getting started.
You are listening to the Southside Unicorn Show, hosted by my friend Ken White. He'll be back after these messages.
Hey, it's your boy Ken White, host of the Southside Unicorn Show, and today's guest is Jay Conner. He is the private money authority, or better yet, he's the private money teacher. So I hope you're sitting down. I hope you got your pen and paper, because yours truly is really getting something good out of this $18 trillion available out there in alternative lending. You don't have to go cap in hand to the bank. You don't have to go to your credit union and go, please. You can call Jay Conner, and I'm sure he has somebody who'll be happy to help you. Think about it this way. It's sort of like your martial arts classes. When you're in your martial arts classes, you have to do the same move over and over and over. The more you do it, the more proficient you are at that particular move, or you become a black belt. Well, because Jay Conner, he has done over 500 deals. He's rehabbed thousands of homes. He's done this thing so many times. He's a black belt in financing. Yeah, that's right. So, ladies and gentlemen, Jay Conner, once again, let's do this. You were saying as we left off about the protection of the lenders.
Yes, yeah, we don't borrow unsecured money from our private lenders. We give them the security backed debt. So it's the real estate that we're purchasing or investing in that's backing that note. They get a mortgage or a deed of trust here in North Carolina, just like a bank does. And they got the promissory note, they've got the mortgage or the deed of trust. We name them on the insurance policy. It's a conservative loan to value. We don't borrow more than 75% of the after repaired value. So they're very well protected.
Okay, I got now, I got 1,000 questions I'd like to ask you, but ladies and gentlemen, every show has its time limit, and so I just got to squeeze it in there. When these deals go down, I think I read somewhere in your works that they get three big checks. What are these three big checks?
Yeah, well, actually, it's us, the borrower, that gets, we can get multiple checks. That's why I love private money, because the traditional way to borrow money for real estate is you only get one check, and that's when you cash out. Unless you're doing a buy and hold, of course, and you're getting rental income, etc. So here's where you get multiple checks on these private money deals. So, first of all, your first check that you get when you're borrowing private money is when you purchase the property. Yes, you actually get a check when you buy. And how in the world does that work? And you take none of your own money to the closing table. Here's the question: who wants to get paid to buy properties, right? So Ken, the host, wants to get paid to buy properties. So let me give you an example as to how this works. And I'm going to use small numbers so it's easy to follow. Small numbers. So let's assume that I am purchasing and I'm investing in a single family house. And let's say the after repaired value is $200,000. Now, I know in California you can't even get an outhouse for $200,000. But let's assume here in Eastern North Carolina, we got this little 1,200 square foot home, after repaired value, $200,000. Now, second thing, let's assume that I'm going to buy that house at a deeply discounted price of $100,000, 50% of the after repaired value. Now, the reason I'm going to buy it for $100,000 is because it's distressed. It needs renovation. It needs rehab. So after repaired value is $200,000. I'm going to buy it for $100,000. Now, let's also assume that the renovation, the rehab, is going to cost $30,000 to make that house look beautiful again. So there's your three numbers. There's one more number. One more number. Remember, I can borrow up to 75% of the after repaired value. Well, 75% of the after repaired value is $150,000. So follow the math. Here it comes. I go to the closing table to purchase this house. My private lender wires to my real estate attorney's trust account. If you're in a state that uses title companies, then it would be wired to the title company's trust account. So here comes in $150,000 from the private lender. Well, let's see, where's that money go? Well, $100,000 of that $150,000 goes to the seller of that house because I bought it for $100,000. Now, guess what? I love this phrase on my real estate attorney's checks. It says excess cash to close, and I love me some excess cash. So I got a I got a $50,000 check minus a little bit of closing cost. I'm going to pick up, as the purchaser of that property, as the borrower of that money, I'm getting a $50,000 check when I buy that property because there's $50,000 of excess money in the trust account. Now, what am I going to do with that $50,000? Well, remember,
I guess here I come.
So remember, I'm going to take $30,000 of that $50,000 for the renovation, the rehab.
Okay.
Now I have an additional $20,000 left over, minus a few closing costs, like I mentioned. I got an additional $20,000 left over that I can use any way I want to. Let's say my private lender needs monthly interest income. So instead of letting the interest accrue which you can if that's okay with your private lender. But some of my private lenders need the monthly income. So let's say
That
my private
8%.
lender is needing monthly interest, right? Whose money am I using to pay their monthly interest income? Their
That
money,
20,000.
because
Yeah.
they loaned out the
Wow.
150,000, right? They loaned the 150. Now, so that cash flows, right?
Let me ask you a question, Jay, because I'm sure my audience is feeling this, and I want to make sure that they get some of this. So is the sweet spot in this entire arrangement the distressed property? Is that the ideal project?
So I'm glad you asked that question. Private money, you're going to use it whenever the seller requires all the cash. Now, that could be a for sale by owner, that could be a bank owned property, it could be bought at an auction. Anytime the seller requires cash. Now,
That's when you jump in with the private program.
that's when you use the private money. You either use your own cash or use private money. For goodness sakes, don't go to the bank or the mortgage company. Now, the biggest profits and the biggest checks that you bring home from the closing table are distressed properties. My average profits right now per single family house in our little area here in eastern North Carolina is $86,000 profit per deal we do. Now, the reason that's the
Why do
average
I feel
profit.
stupid still being here in California, scratching and scraping every day? I mean, the production assistant Connie, she's living in the filet mignon of Southern California. She's over there in Orange County, and let me tell you, you can't buy a soda pop over there, without $5. But now, Jay, I want to run something by you for the edification of my audience. Uh, your program, would it work in California? Or is California like a verboten? You guys kind of stay away from this area.
Right. Well, private money works anywhere there's real estate and anywhere people have money. Now,
And
that brings up a
can
good point.
I don't mean to interject so much, but I'm doing it for a reason. You said anywhere there's real estate and anywhere there's money. So I want to. This is a litmus test, and it's a real test, and I'm doing it in real time so that the audience can get a feel for private lending. Jay, there's a property, a resort property in the Republic of the Philippines, and it's beautiful. It's as beautiful as anything you see on Fantasy Island. It's a very nice home.
You just
They
dated
want four.
yourself.
Yeah, yeah, right. It's valued at 45 million pesos. Now, I spent some time in the Philippines. That converts to $1.5 million in American cash, right? American money. Say somebody wanted to do a deal, and they said, if you give me $1 million cash, which is half a million on the table, like I just learned from you, right? Is that something you could touch? Is that something you could do?
Absolutely. I've got multiple private lenders that have more than $1 million with me. Now, that brings up another good point. You can have
Mm-hmm.
more than one private lender funding the same property. So, how does that work? Well, you could have one private lender in first position, a first lien on that property. You could have another
Okay.
private lender in second position. That's called a junior lien. And here is what you want to
Wow.
watch. There's this thing called total loan to value. Total loan to value. So what is total loan to value? Total loan to value is when you add up all the notes from private lenders that are being secured by that one property, and you still
Well, I'll
don't
be
want
darned.
all the notes to total more than 75% of the after repaired value. That way it keeps it a conservative investment.
So if it's meant for you to have a home, if these people want you to have the home, going with a private lender system, like you're saying, it's almost a guarantee you're going to get that home.
Oh, sure. Oh, and that brings up another point. You're asking the best questions, Ken. So that
Thank you.
brings up
Thank you.
another point. So
Hmm.
I'm getting ready to say something, Ken. I'm getting ready to say something. I'm going to take a little risk. Take a little risk when I say this. But have you ever heard this? The guru, the real estate investing guru on stage, teaching, educating an audience of real estate investors. And the guru says, oh, just get the deal under contract. The money will show up. Have you ever heard that?
Yeah, yeah. The check's in the mail. That's basically
Yeah.
Yeah, I heard
So,
that.
like, that's the most stupid thing I ever heard in my life. Where's the money going to show up? Has money got like legs that's going to come run you down? It's like
Is it
you
here
get a
yet?
deal
Is it
under
here yet?
contract, right? You get a deal under contract, and like a box full of money just drops out of the sky at your front door. No, that's why I practice and I preach the money comes first. Get the money lined up first. And listen, here's a big tip. Here's a big takeaway. Here's a writer downer for all of y'all taking notes. Quote unquote, desperation has a smell to it.
Oh,
Desperation has a
oh,
smell
that's
to it.
deep. That's
Now,
deep.
what
Wow.
word am I talking about? You see, a lot of real estate investors are taught you got to pitch deals. You got, you talk about the opportunity for the lender to invest in this particular deal. And listen, you already sound desperate if you're trying to pitch a deal. So I practice and preach, get the money lined up first. Offer your program, teach your program like I did and do, without any
Hmm.
kind of deal attached to it. It's the same program.
Every word that's coming out of your mouth, Jay, I'm learning. I, this is incredible. You make me feel like being a podcaster is not what I want to do. I want to get in on this real estate stuff. I am so sad that the show is only 30 minutes because there's a wealth of information you have inside of you, and it's just bubbling out. So now, if people wanted to get in touch with you, how are they able to do that? How can we reach you?
Thank you so much, Ken. Well, the best way to get in contact with me is let me give your audience a free gift. And here's the free gift: my national best-selling book, which is titled Where to Get the Money Now. This is not an ebook. This is actually a real book. Where to Get the Money
Book.
Now. Subtitle: How and Where to Get Money for Your Real Estate Deals Without Ever Relying on Traditional or Hard Money Lenders. And I'm also going to include 2 tickets valued at $3,000 to my private money conference, the private money conference. I'll autograph the book. I'll ship it to you priority mail in the United States Postal Service, which is still in business. And you can pick up the book, just cover shipping. The book is free, just cover shipping. And here it is, www.jayconner, and I'm an ER, not an OR, so JAYCONNER.com/book. Again, that's JayConner, JAYCONNER.com/book. I'll autograph it. I'll rush it right out to you.
Wow. Now that, ladies and gentlemen, this is why I love having guests like Jay Connor on the show. You have just been enriched. You have just been given the hookup. Um, if it don't make dollars, it don't make sense. You got to wake up with your money on your mind and your mind on your money. Jay Connors is just such a man. Jay, that deal in the Philippines is real. So I'm hoping to talk to you off the air and get you the information for this potential deal because it's right there. It's valued at 1.5 million. I'm not sure, but I'm thinking maybe if they saw $1 million on the table, it might motivate them.
Nice. Well, that sounds exciting.
I can't speak for them. I'm just saying I think how they say money talks and everything else runs the marathon, right?
Hey, you cleaned that up nicely.
Well, that means you're familiar with the phrase. I like you, Jay. Jay, you're one of those people that if you get to know you and the person, you got to be about your own business too. This is not all about Jay Connor. If you're going to deal with such a man, you better come correct. Have your chips in order, have your ambitions straight, know what you're doing, go into it with your eyes wide open. But somehow I think if you work with Mr. Jay Connor, you've enriched your life incredibly.
Ken, thank you so much.
You're welcome. Hey, listen to me. There's no place I'd rather be. There's nothing more I'd rather do than being right here doing this show for you. I'm Ken White with Jay Connor, and we are out.